Federal Reserve taking some extraordinary emergency action, slashing rates to zero in an attempt to stabilize the market. Steve Liesman joins us now for more. Hello again, Steve.
Hey, good morning, Joe. Yeah, absolutely historic actions by the Federal Reserve on a Sunday, which have echoes of the financial crisis back in 2008, 2009, where the Fed tried to take action before markets opened. But instead of doing things like it did in the crisis over a series of weeks or months, they did a lot all at once here. Let me go through the things that they did in their emergency action, cutting rates to zero, a full 100 basis points or 1 percentage point. That was the first thing. Second, $700 billion of asset purchases, $500 billion of treasuries, $200 billion of asset-backed mortgages, agency-backed mortgages, and they'll come in for the first time this morning with a $40 billion purchase. They slashed the reserve requirements for thousands of banks to zero, gave some guidance, by the way, on liquidity coverage ratios that might create additional space on dealers' balance sheet. This morning we'll see. And finally, they eased the terms on discount window lending and on those dollar swap bonds. Now, I asked during the emergency press conference that Jay Powell held about the economic outlook, whether or not recession can be avoided. Let's listen to what he said, and we'll come back and kind of dissect it in just a second. Here's what Powell said yesterday about the economic outlook for the next couple quarters.
The second quarter is probably going to be weak. In fact, in the view of many, output declining, output lower in the second quarter than it was in the first quarter. After that, it's very hard to say how big the effects will be or how long they will last. And that's going to depend, of course, on how widely the virus spreads, which is something that is highly uncertain and I would say, in fact, unknowable.
So let's go back now and talk about the way we were talking about this virus a month ago. It was a first quarter event with some spillover, but likely a rebound in the second quarter. The Fed chairman just essentially wrote off the second quarter, and he used the phrase output decline, which suggests the possibility of a negative second quarter. So everything that we've been talking about, and I don't know when this actual transformation happened, maybe in the last week, maybe the last couple of weeks, the market might have sniffed this out much earlier, has been pushed ahead or forward at least 3 months now, where I think a best case scenario is some form of a rebound in the third quarter now. And then you heard that he was very uncertain about that. So, guys, there's been a big transformation in the economic outlook, a big transformation in the earnings outlook. Is what the Fed did enough? Well, Powell was very clear. They have additional tools they'll use. They may be talking with the Treasury. He talked about using the 13.3 emergency powers. I think what the Fed wants to see is how markets clear this morning. And Becky, just in answer to the question you asked in the last hour, I still have to wait a little bit longer to see how spreads are trading this morning. I do have some information from one market person who said things are a little better this morning.
You know, Mohamed El-Erian is going to be joining us a little later. He had already said this morning that the market technicals are going to be flashing red here. I guess that's what we kind of wait to see. Steve, what time do you think before you really have a better idea of what's happening?
Well, one dealer just told me 6:30, and then I can get on the phone and talk to a couple folks who I know are up and watching screens this morning. I am wondering whether or not this is going to be something that, if there is a response, is going to happen when the Fed actually comes in. Remember, they said they're going to do $40 billion of outright purchases. Interesting what Powell said yesterday. He said we no longer can be an intermediary here. In other words, lending money to people who can then go in and borrow and do repo. The Fed is doing direct purchases here. And Powell said that came from their observation of what kind of effect they had with their Friday action and earlier on Wednesday, that it wasn't enough. And they're finding they have to do more and more and more. It's a matter of confidence here. Do you think the Fed can go in and make the Treasury market right? That's the bet you have to make this morning, that they can make this very, very important market work. And I don't think very much matters to them beyond that right now.